We're in the middle of April and nobody knows where this real estate market is going. In this short video, I'm going to talk about three main things that are going to drive this market for the rest of the year. Number one is the consumer sentiment. Number two is the demand supply situation. And number three is the timing of that interest rate cut that everybody has been waiting for. Start with the basics on where we are today. Now, the latest report that came out from Toronto Real Estate Board, and I'm going to look at detached homes basically because that's the largest category of homes that are sold. Analyze that March report real quick. The prices, if you look at the median prices, they went up from here, the bottom in January, to where we are today. They're up about 9.2%. So the median prices are up, right? Another thing, when you compare it to last year, which is March of 2023, the median price is 1.3 million. Now it's 1,308. So even when you compare it with last year, same time, we are up. Second, let's look at the demand and supply situation, which is one of the most critical factors in determining the prices today and going forward. So what you want to focus here is on the red line, which is the demand, which is the number of units sold, and the blue line, which is the total active inventory in the system. Now let's compare. Last year around this time, we had demand and supply gap was very small. That means we didn't have enough supply for the demand, right? It's very tight. So prices going up. Fast forward that to September, October last year, you'll see that demand and supply was really out of balance. There's too much supply. Things were not selling. Look at what we have today. So demand and supply, we are actually pretty tight. So what this showing is their supply is very limited right now, right? And that's a recipe for higher prices. So what's the prediction of the market for the rest of the year? Now let's just recap quickly. What happened in the early January and February of the year is the brave people were sitting on the sidelines who were bullish about a rate cut coming soon. They jumped into the market and hence we saw a 9% increase in the median price in the first 2 months. So from January 1st to end of March, we saw a big gain. Now, what is happening is there's a strong job reports in the US and the Canadian inflation numbers okay, but there's no certain time frame for when the first rate cut will come. The consumer confidence is now going down, and we think over the next 2 months till June Bank of Canada meeting, we're going to lose some steam. We're going to lose 2 to 5% of the price appreciation that we've had early in the year. Now, what will happen for the rest of the year depends on when that rate cut comes. If the rate cut comes in December of 2024, we're going to lose all the gains that we have done. But if it comes earlier, we will regain and the market will stabilize and the buyers will be a lot more bullish and we're going to start seeing some more appreciation going forward.